Kent, thanks for stopping by.
Pleasure to be here, Mike. Thanks.
I want to read something. So we caught up the other day and you sent me an article you wrote, and I wanted to read an excerpt from it to start off our podcast. So this is an incredibly exciting time to be alive. Before our eyes, we're witnessing the evolution of a technology that's simultaneously empowering, liberating, and disruptive. The decentralized blockchain is already beginning to shake the world. With each passing month, cryptocurrencies are gaining wider adoption as programmers and entrepreneurs create, innovate, and explore new possibilities. Yet it's only the beginning. It's not just the currency that's evolving, it's the platform. Bitcoin will soon be supplemented by tools and protocols such as open transactions, Ethereum, and Mastercoin that enable smart contracts, digital assets, and the creation of any financial instrument imaginable, from stocks to options to bonds and beyond. Now, you wrote that in February of 2014.
Correct.
Amazing.
Yeah.
Still
That was in
relevant
Bitcoin
today.
Magazine. Before Bitcoin Magazine was the purview of only Bitcoin maximalists. They were a little bit more open. Actually, Vitalik was the editor of Bitcoin Magazine for a while. So, yeah, that was almost 10 years ago, and it's been a crazy 10 years. But it's cool to see that's exactly how things have played out in a broad sense.
Well, not only has it played out, Kent, but it's like still relevant today. If I read that today, like if you had published this, this article yesterday, it would still be just as relevant. Except maybe WorldCoin. I don't know if WorldCoin is as relevant.
Yeah, open transactions, Mastercoin, some of these things fell by the wayside or evolved. But Ethereum in particular, when I was writing that, I was kind of seeing the potential for Ethereum after, this is a couple months after the white paper was announced and this was becoming a thing. I thought, man, this is actually exactly the right way to maybe build on what Bitcoin has done so far. But yeah, to your point, Mike, um, the financialization, the tokenization, and decentralization of all these financial instruments, it's been proven out. And now as we approach 2024, a decade ahead, the main thing is sort of just like institutional adoption, regulatory stuff, but it's gone from a funny and quirky little experiment to that nobody really took seriously to this is going to change the world and is changing the world.
It's fascinating because when I talk like that and you talk like that in a general room, and what I mean by general is people that maybe aren't familiar with crypto, they aren't necessarily advocates or believe in crypto in general, we always get funny looks, right? So we're very contrarian today when we say that. And there's a decade that you've been saying that. And like, talk to us about that. Like, how many times have you been in a room or said something or wrote something like you wrote and people read it and thought, this guy Ken is crazy?
Yeah, that happened quite a lot, especially in the earlier days. I remember telling friends about it, and even my my wife or my fiance at the time back in the day. She looked at me like I had three heads, like what? And even myself, when I first learned about Bitcoin, in like 2012, it's like it takes a while to get your head around it. But then if you really take the time to dig in and you have that light bulb moment, it's like you see the real power there. So yeah, I had many moments over the years, whether it's friends or just people I was talking to, talk about this stuff. And I think society programs us in a way to not think outside the box. Here in America, we like to think that this is the land of innovation and free thinking entrepreneurs, but the media, society, I think, really conditions us to follow the leader. And when somebody is telling you otherwise, especially somebody that's not in a position of like authority, somebody that's just like some dude like me, like, okay, well, why is his opinion valid, or this is crazy? But all I would tell people, at the time when they were saying that this is nuts, is just like, well, I've dug into it. I like to think that I'm somewhat intelligent guy, and I'm also not somebody to jump on, hype trains or be lured into things that don't really have substance. The sort of that those takes, died down as blockchains became more uh, commonplace and prevalent in the world. But yeah, even today, in the act of investing in crypto is still a pretty contrarian thing. You still see this opposition with mainstream media, with certain parts of the government. Of course, that's a very timely problem right now. Yeah, I think that the theme of this podcast is like so apropos for the idea of investing in the crypto space in particular.
Yeah, it's so interesting because I mean, you hit the nail on the head. We live in this society that kind of once you're a winner, people root for you, it seems, but they tend to really shun people that are kind of going against the grain. And I'm not sure why that is, but you see a lot even in the broad sector. I think what's fascinating about crypto is probably more than any other asset class that I've really been exposed to, which I think is almost all of them, is that the people that have the greatest opposition know the least about it.
Very true, and it's almost like a willful ignorance. I think it's like they don't want to learn more. Maybe there's a couple reasons for that. I think one has to do just with there is this like very widespread perception of crypto is just about greed and fraud. SBF certainly didn't do us any help along those lines. These things do exist, and in like many industries and new industries, there has been plenty of fraud in crypto. Banking has had the same thing. The internet in general. We've dealt with many internet scams and email scams, but I think another thing is like there are certain subsects of people that that really don't like crypto. That so some people are maybe politically are more so on the left, and they think anything outside of state control is really antithetical to what they want. They want the state to have their tentacles in everything. Other people maybe just from a money standpoint, this really has been. It's about finance at the core. It's about digital wealth and digital assets, even though it can empower much more than just number go up. As we've seen with DAOs and other things, that's kind of a different rabbit hole. But um, I think a lot of it is like people that didn't get in early. Maybe they learned about it, and then the thing goes up. Uh, they just straight up are mad that they never invested, and they're never going to invest. They just in their mind, it's like this is a no go, at least up until this point. Perhaps like institutional adoption and the advent of like ETFs will change that. But yeah, it's really interesting. Like at some point, people that are so opposed to decentralized technologies and blockchains are going to be using this in the fabric of their everyday lives, and they're going to at that point they won't really have a leg to stand on, because it's like, man, like I'm using this thing now. Maybe they won't even know they're using blockchains, but I feel like that is probably an inevitable scenario.
Yeah, people talked about how the internet was dead for the longest time and it had very limited use case. And even like when the car came out, right? There were all these. I think I saw recently a picture of like a muddy road and a car stuck in it, and there was like a guy on a horse passing the car, and it was kind of an article to say like, see, this is where that slick innovation got you. And I do think you're right. I do think that as the price goes up, and the technology is more implemented in modern society, that people do, it's like a coping mechanism. It's almost like you want to root against this thing that you missed out on. I've even seen that with pro crypto people that sold, and they are constantly rooting for it to go back down because they want to get back into it. It's kind of this fascinating thing. And it's a very volatile asset class, right? And you have rode some amazing swings, I'm sure, in net worth being heavily invested in crypto. How do you think about and talk about and explain all of the volatility that comes with the asset class?
Um, yeah, it really is kind of unprecedented. I think we've seen volatility in the stock market sometimes, but this puts it to shame. I mean, a lot of the volatility historically, I think, has been on account of just the simple fact that the market cap was much lower, so it didn't take much money to move these assets around, and still doesn't for smaller cap crypto assets. These things just fly around, and relatively small players can have a big impact on what happens. Um, I think also is just the lack of, like, how should I put this? Just like the general uncertainty and lack of clarity about like where things might be headed. So, for example, in the financial world, there's always, let's talk about equities. There's always uncertainty, of course, and this leads to people speculating on maybe the quarterly report, or future fortunes of a company, what direction it's headed. But things are more sort of like predictable. Okay, like Apple or Nvidia is going to have a quarterly report coming up, and it's going to, nobody knows exactly what's going to happen, but there's some predictable sort of things that you can imagine. It's all kind of templated, and there's no surprises. Whereas with crypto, we're building these entirely new decentralized systems. Like, a good example is Ethereum with the merge. It's like some very fundamental things were being changed with respect to in this case, Ethereum's consensus protocol or mechanism, and it's like, is this going to work? Is it not? And that's just one example of like kind of we're just building this as we go, and it's entirely new territory. Kind of the cliche analogy here is like building on the frontier, but we really are. There's not like a template we can use. So I think that sort of that uncertainty plays into it, and then there's something about crypto also that seems to really be an amplifier for those animal spirits that we're so familiar with, the greed and fear that and FOMO that power up cycles and down cycles. Again, I think just having like when a lot of these assets aren't as big in terms of market cap, they can get moved around faster. But also the industry that we're in is kind of, it can be a big echo chamber, especially on Twitter. So, big players that are doing things there, they can kind of aggregate opinions, and then you have that echo chamber aspect. Yeah. What's your take on that volatility, Mike? Do you have a similar perspective?
Yeah, it's kind of fascinating, right? I talk with a lot of investors that really don't understand what crypto is. And it's interesting. A lot of people that even own or dabble in crypto, they are uncomfortable with it. Like, what does this represent? And one of the reasons why I was super excited to have you on, and we're going to talk about ETH Denver, and you've kind of been on the forefront of seeing this innovation, but people really don't think of crypto as startups, right? So I think of Bitcoin as the oldest fintech crypto startup, right? And you kind of have these interesting combinations that I think explain the volatility. One is, look, if you could price any startup in real time, right, the price would go up and down insane amounts, right? I've talked about this before, but it's like, in startup land, as soon as, Microsoft or an Amazon says they're interested in a pilot, everyone thinks they're going to be, this company's going to be worth $1 billion. And if you could price the shares right then, and you could say, hey, does anybody want to buy this company now that Amazon's interested in doing a pilot, everybody would want in. And then if you suddenly said, hey, Amazon's going to pass on the pilot, everybody would want out. But to your point, even when you compare it with stocks like NVIDIA or technology stocks, people are always wondering if the asset class is going to go to zero in crypto. And they're not thinking that in a lot of their other asset classes, right? So you invest, it's like, hey, in probably not NVIDIA, but let's just use that for the analogy. NVIDIA could go to zero, but they don't think the stock market as a whole is going to go to zero. So you kind of have, and now when you combine that your average investor far over trades, they panic, sell, they buy high, they sell low. When you combine all those factors, the liquidity of crypto, the fact that people really don't understand how to look at it, and they're not thinking of it maybe necessarily as emerging technology companies, and then also that there's this fear whenever their holdings go down that the whole market might go to zero. When you have the combination of all those factors, you're going to get a ton of volatility, right? And that's just part of what you're signing up for, I think. I really think you're signing up for that when you do technology investing in general that's early stage. You just don't see and feel that volatility, right? Like you almost have to be on the board or be at the company, but every founder, like Jeff Bezos will tell you, every founder of a very successful now mature technology company will tell you it was just chaos, and every other day they thought it was either going to be a massive success or a massive failure. Like everybody that's worked at a startup knows that's going on. It's part of the culture.
Absolutely. Yeah, and the inverse is true, in terms of like going to zero, when things get quite bullish, there's kind of this sense that like, the sky is the limit. Like things can get just astronomical. And I think one reason for that, of course, that can happen in regular, non crypto markets as well. Like my favorite example of those animal spirits going crazy in the non crypto world is the Japanese property bubble in the late 80s, early 90s, where like the price per square foot of real estate in, say, the middle of Tokyo was just astronomical. It didn't make any sense, and sometimes valuations get cranked up to levels that just don't make sense. But that's always usually a warning sign. So that this has always happened. Tulip bubble, things like that. But in crypto, that we don't have like the luxury of having like common sense valuation metrics and like any sort of, until more recently, like any really meaningful fundamental analysis. Like PE ratio, does that apply to crypto assets? And if so, how do you apply that? So in a bull market, when things are going crazy, there's not really a sense of like, well, maybe things are too high now. It's like, well, I don't know. Is 500 billion a realistic market cap for Bitcoin? What about a trillion? What about the market cap of gold? And then you could always like justify higher valuations. So yeah, you see this on the downside and the upside, and it really just amplifies those ups and downs.
Yeah, and like I loved your analogy. I mean, that's kind of reinforces what I was saying is even when the Japanese, real estate bubble happened, people weren't questioning the real estate. Real estate is an asset class suddenly. They weren't saying like, oh, like is real estate no longer a viable asset class? And you get that in crypto. I want to talk a little bit about ETH Denver because I think you guys have built something a little like really amazing. Talk to me about what is ETH Denver and how did it start? Which, by the way, I was at the first one. And where is it now? And how do you kind of view that progression as it reflects on crypto adoption?
Yeah, great questions and very timely because we have another ETH Denver coming up in a matter of months here. So ETH Denver at the core is basically a joyful celebration of building uh, decentralized things. I would say at the core, ETH Denver, ETH it's an Ethereum thing first and foremost, and I think it always will be, majority Ethereum. But one important thing to note here is that much like myself, ETH Denver is not maximalist in any way. We've always welcomed different blockchains, different ecosystems. We had Stacks from Bitcoin hanging out last year, doing some stuff, and other Cosmos, whatever. But really, the core idea is like hacking and building and connecting around this stuff. And it's turned into a bit of like a cultural phenomenon. We have objectively, it's like certainly the biggest Ethereum event in the world. And I think in terms of other crypto, conferences or events, it's up there. You have Bitcoin Miami, you have Consensus in New York, but it's up there with the bigger ones as well. So going back to kind of the advent of it, because this sort of informed what it became to be in the down the road. So let's rewind back to 2014. Back then, this was shortly after the Ethereum white paper when it was announced here in Denver, and maybe you tapped into this too back then, but there was actually a thriving Bitcoin scene, relatively thriving, back then. But Bitcoin is under the radar as it was, had some really good community sort of involvement and things going on here in Denver. There was like the Denver Bitcoin Society was the most notable one. a guy named Ben Ulrich was really driving that forward. And so here's me learning about Bitcoin back in 2012, 2013. And as I sort of, researched, I'm like, well, there's a community, so I can go hang out with these people and talk about these crazy ideas. Um, I, I think the reason that there was that good community is, Denver has always had in Colorado in general, has had a kind of a free thinking, independent spirit, Wild West sort of thing. Where, for example, we're the state that uh, uh, was on the frontier in terms of legalizing marijuana, recreational marijuana, things like that. So lot of free thinkers, a lot of people that, wanted to think beyond what's in front of us. So kind of I was very excited about that, and at the same time I had really gone to a lot of music meetups. I'm a musician as well, and I had fallen in love with just going to meetups and hanging out with people about these topics you talk about online and meeting in meet space, and it was great. So my insight was like, shit, maybe we should have a Ethereum meetup. So I checked to see if anybody else was doing one, didn't see it, so I started the Ethereum Denver meetup in early 2014. Initially, it was like 10 of us hanging out at a dive bar in Globeville, if you know the area. Really kind of punky and underground, but it was cool. We would hang out and just talk about this new tech and the potential for it. Fast forward a few years to like 2017. At that point, the ICO bubble was starting, and this was like the first sort of that was really like a notable change, because it wasn't just like prices were going up, but at that point, Ethereum as a network had been live for a few years, and people were starting to get interested. Like, oh, this actually is working. This wasn't some pie in the sky thing.
And just for our
So
audience, real quick, not to interrupt, Kent, but ICO is initial coin offering, and you would define that as new projects being built on top of Ethereum. So, like maybe Ethereum's like the app store, and new applications are being built on top of this blockchain.
exactly, yeah, and this was getting a lot of hype back in 2017, 2018. Back then, you could just like put up a white paper with an idea and create a token for an ERC20, as we call it in Ethereum, and things were getting funded with just like ridiculous ideas. But there were some cool projects. Um, but that sort of triggered more wealth coming into the ecosystem. And as that happened, uh, we saw very vividly uh, more people coming to the meetups. We went from having maybe 20, 30, 50 people to, gosh, like 100, 150, I think, maybe even 200 people at one point. So there was a lot of buzz. I was fortunate to have the help of Sasha Stern and Corey Ditch, my sort of compadres, as we dealt with all this like scaling. A couple other guys who really understood the blockchain stuff. But then, so to get back to ETH Denver, there was a transformative moment in it must have been about mid 2017, something like that. A guy shows up at one of the meetups somewhere downtown, and starts chatting with me. Says, "Hey, I know Vitalik's dad," and kind of talking about how he has some connections in the space. I'm like, okay, cool. Turns out this guy's name was John Poller, and John had an idea for like a hackathon. So myself and Sasha and Corey had bounced around this idea as well. Like, hey, maybe we should do like a little hackathon thing. But John was thinking much bigger in terms of like, let's invite people all over the freaking world to do this and figure out how to really like, blow it up, and also capitalize on just all the excitement that was happening. So we kind of talked about it and how to really, what should this look like? What should it feel like? He brought in a guy named Justin Moskowitz, like an event planning rock star. So he's like the unsung hero of ETH Denver. I can't sing his praises enough. He had many sleepless nights across all the ETH Denvers getting it ready. But basically, we kind of built this team to put on this hackathon. Or really, that was kind of the initial idea, just a hackathon, maybe a conference kind of thing. So early the next year, we had the first event, and lo and behold, it was a success. We had over 1,000 people. It was at the for those of you from Denver, it was the old Sports Castle off Broadway, and I personally missed that venue, even though we're not there anymore. It was really cool, but it turns out the most important thing with ETH Denver, I think, is like, um, building on what I said before about, just hanging out in meet space is fun. Anybody that's been to meetups knows that. It, we created this environment where people could just like feel so comfortable being themselves, and also this environment where like, dude, you can hack on anything you want. You can meet people, like-minded people, even if you're not a developer. You could contribute in some way, or maybe you're just learning. And like, I feel like there's always been this like countercultural aspect to ETH Denver in terms of like, it's something beyond what we're fed via the media or what's always in front of us. It's like a whole new world. We can kind of build the future, and you can do what you want. Let your freak flag fly. That's always been a common theme. So we saw that at the first ETH Denver, and then really from there, it was a matter of just like scaling it. John and the rest of the team like did an incredible job of finding sponsors. Um, some amazing projects were actually birthed at ETH Denver. 1inch is a great example. The Dex project, Dex aggregator, um, and yeah. Fast forward to today, and we had over 15,000 people. 15, not 50, not yet. In Denver this past ETH Denver. For the event. We moved to the National Western Complex because we did outgrow the Sports Castle. But at the core, ETH Denver really embodies that optimism of crypto, and not that cheesy sort of like, oh yeah, like blind optimism. More just like, oh, this is cool. Like, there's no limitations, and no. It's also permissionless, which inherits one of the most important aspects of blockchains. Nobody is going to sit there and be like, oh, this is a dumb idea. You can't build that. Like, you can build anything on Ethereum and on decentralized blockchains. And we really, I think, have done a great job of sort of having an environment where that encourages that sort of thing. And I guess it worked. We're fast forward to 2024, and people really enjoy it, and it has become sort of a cultural phenomenon in the space, and maybe even on a wider basis too, with like NFTs and art and music getting involved.
Yeah, it's pretty incredible to see. I mean, it's really unlike almost anything I've experienced where you have this cyberpunk kind of theme going on in the background, and you just have like all these different stages of decentralized startups. Like you said, you have people that are literally forming startups that day and treat it like a hackathon, and they're launching a project. And then you have projects that were that 2 3 years ago, and now they're some of the biggest sponsors. They have a booth, right? They're rolling out the next iteration, and it's really amazing. I think it's hard to translate, and the fact that you guys have done it to where it's essentially free to attend is incredible, because most of these crypto conferences, there are thousands of dollars. People don't realize just to get the ticket to enter, it's thousands of dollars often. And this is one where you can come from anywhere in the world and essentially join for no cost.
Yep, that's been a huge differentiator, and I also think one of the keys to our success is that free aspect. We're not charging anything. Um, of course, the sponsors primarily are the ones that shoulder those costs, which can be a challenge in a more bearish environment, especially the ETH Denver that was sort of amidst the that we had. I think it was the second or third one when the bear market was in full effect and things were really nuked. Um, but it still worked out. There was enough going on in the space where we were able to make it happen. But yeah, it also kind of speaks to the lack of gatekeeping. Again, like one of the beautiful things about having it free to attend is there's no barrier for people that maybe they can't afford like a $300 ticket, or I don't know what they charge for Bitcoin Miami or Consensus, but I know they charge something, and it's beautiful that anybody can come. As long as you can make it out here. If you're local, it's essentially free. We've even had scholarships in the past to fund people that really want to make it out, but maybe can't afford to travel. So that's really reducing barriers. I've always envisioned, even going back to the Ethereum Denver days, is this is a big tent. I hate the idea of elitism, of oh, this is only for like people that really know their shit, or the cool kids or something. No, this is a big tent, regardless of your background, regardless of your gender, color, religion. Like this is humans building stuff together, in a way that's beyond the strictures of sort of what society has forced upon us before, and it's fun.
It's the ultimate contrarian event for decentralized applications.
That's a cool way to put it.
Everyone there is a contrarian to some degree.
Absolutely. And even people, we've seen this more recently, like last year, with a lot of the NFT stuff getting more popular, and even the year before, is like even more recent uh, converts to the space, or even people just kind of sniffing around and trying to figure out this is right for them. You can just see the smile on people's faces. It's like, whoa, this is like something so new, and it's so multifaceted. Yeah, you can't help but feel like you're just doing something completely different. This is not just attending some typical, like a sports event or some tech conference. It's so different.
What's your lowest crypto related moment and how did you get through it?
Let's see. One of the dumber things I ever did was gamble away some Bitcoin. So back in the day, Satoshi Dice was that was actually the number one use case of Bitcoin. This is going back to 2012 ish. I learned about Bitcoin in 2012, and then I actually I earned some Bitcoin through selling my music online. That's actually how I learned about crypto. And back then it was just Bitcoin. But there is a site called Just Dice that was around, I think, in like 2013, 2014, and I was feeling financially stressed at the time. I thought, well, man, I'm just gonna gamble a few Bitcoin, see what happens. And I don't know what I was thinking, but I think part of it is like it just seems so easy, and like I trusted the transparency of this thing because it was built on Bitcoin itself. But yeah, that was, in hindsight, that was a dumb move. Not investing related, but it was also like a really really good a good lesson. And just don't do anything risky. I myself am more like conservative guy for crypto, at least. I don't degen and YOLO into things really. But I've definitely I took that lesson to heart. Like, geez, and especially like, okay, on paper that wasn't much money at the time, but obviously Bitcoin's worth a lot more now. So that was a mistake. One I wish I had back. Just a retarded or a really dumb thing. But yeah, it's been a journey. Have you had a couple of those moments as well?
Oh, I mean, yeah, I mean, like, well, I think it's funny because I was just, when you were reflecting on yours, it's like, imagine if, everybody's done some gambling, and imagine if you went to Vegas and lost $100 10 years ago, but now that $100 is worth $100,000 or more. But now it's, with US currency, it's the opposite, where it's like, oh, I lost $100 10 years ago, but now that's nothing, right? Like it's the
That's
purchasing
that's a
power
good point.
fraction. It's actually
It's like
kind of
the
a
opposite
really
of
fun
inflation.
example of crypto.
Yeah, absolutely.
I would say, I've had a lot of moments where, I've been heavily in, when I first got into crypto, it was 2016. And, I think it's important to remember everyone when they get, when they come into the space, they just feel completely overwhelmed. You feel like you're super late to the party. And, I remember, trying to diversifying things that didn't work out. But I also remember, some VCs that I knew because I did a lot of VC work before. So I was in both early and late stage venture capital for a decade before I really started getting into crypto. And, a lot of people, I mean, today they're still, cautious about it. But back then it was like you're throwing away your career by focusing on crypto. And that was hard to deal with because these were people, I respected. But ironically, the same thing that we talked about in the beginning of this podcast always kept coming up, which is like, well, where's your opinion coming from? And it was very surface level, right? It was not something that they had looked into. There was not a deep dive. In fact, I rarely meet people that are negative to crypto that have really spent a lot of time researching it. And so, I had those moments. And then, when the prices go up, you feel like a genius. Everyone thinks you're a genius. The prices go down. You feel like an idiot. Everyone is confirming you're an idiot. You maybe have friends and family members that followed your lead maybe later than you, and now you feel sort of responsible because maybe they invested in this thing at they bought Ethereum when it was $400 and now it's $100, and that's an incredible loss for people, or really for any asset. But when you're like, if that happened in the stock market, most people would assume that company's no longer going to be around. And
For sure.
so I think everyone that's been in crypto has encountered those lows and highs, and it is a environment of unjustified euphoria or unjustified depression, right? Like, and maybe you could say justified depression because of the swing in net worth, right? You can look at, oh, I was worth this, last year, and now I'm worth this. But I think like I was used to it from being in venture and sitting on boards. Like I knew, even though our valuations of our holdings would stay stagnant. So the way it works in venture, right, is the companies are generally only valued when they raise another round. So roughly every year and a half to 2 years. I knew for certain like some of those companies were almost dead, and I knew or they definitely had increased in value, and I knew some of those had highly increased in value, right, and they were going to be very successful. So I was sort of used to that, and I think that principle of investing helped guide me along, where you have to have conviction in what you're investing in. You mentioned a little bit about the regulatory environment. I know that's a passion of yours, and I want to talk about that for our listeners. Crypto, it seems to be, is an asset class that especially the US government has kind of dragged their feet on compared to some other places in the world, which is very interesting and unusual because generally I think the US and America is seen as the leader in terms of technology and innovation and cultivating that. So I know this is a passion of yours. I want to talk a little about your perspective on that and what's going on.
Yeah, this really is a passion of mine. Really at the core, and of course, this isn't a necessary condition for anybody wanting to invest in the space. But one of the reasons I really got into crypto is I am a very much a civil libertarian, and I'm very I've always been concerned that the freedoms we have could be eroded, and in many ways we've seen that both here and abroad. Um, it's a big difference from how things were, say, after the fall of the Soviet Union, when hey, this authoritarianism is going to sort of gradually disappear. It hasn't worked out that way. Um, so yeah, what we're seeing now is like such a contrast to the way the federal government in particular handled the internet, this new technology with a lot of promise. But what is this thing? How is it going to interact with the existing institutions? But back then, the government and the Clinton administration in the early '90s really decided to take a more laissez-faire approach and let these things flourish. And lo and behold, we have Silicon Valley. We have, it's hard to quantify the impact, the positive impact that from job creation standpoint, from wealth creation standpoint, that of course the internet has had, and tech in general has had on the U.S. So fast forward to today, like what's different? I think going back to my earlier point, a lot of people on the left they see the existence of kind of a separate system is a real threat. They want the state to control maybe not everything. They're not totalitarian, but they certainly want the state to be in control of things like money. So you have things like Elizabeth Warren recently came out in favor of very, very transparently talking about how we need a central bank digital currency. So for somebody that's more of a civil libertarian like myself, this is a terrifying prospect. This is an Orwellian nightmare. Imagine the government having the ability to trace every transaction, and maybe just arbitrarily pull money from your account, or maybe blacklist transactions, or say, "Hey, citizen, that was not a authorized transaction to that address. We're going to punish you." I mean, this is part of what like China's building. Back in the day, I'm old enough to remember, growing up as a kid during the Cold War, the U.S. was supposed to be the antithesis of big socialist totalitarian regimes, and instead we're trying to emulate them. And I understand why maybe more statist people on the left are trying to do that. In addition, I think banks certainly, up until this point, have seen crypto as a real threat to what they're doing, and rightly so. But to their credit, I think they're starting to see also maybe that there's benefit in this. So for example, and they're not banks specifically, but imagine like Visa and Mastercard, the payment rails companies. They're really starting to get on board with crypto. They see the benefit of this. But going back to the regulatory thing, it's just we're really at like a crossroads, I think, and I don't know how it's going to turn out. A lot depends on the election in about a year, and I really hope we get it right. Otherwise, and we're already seeing this, it's quantified, it's quantifiable. You can see this in statistics about like developers working in crypto. They're just going abroad, or startups are going abroad. It's a very stifling atmosphere here in the States, and that's by design. I would say the people that want to make that happen are getting in their way. So it's certainly a headwind right now. But there's one lesson I like to always come back to, and this is like, if anybody's a bit of a masochist or just a bit of a historian with like new technical innovations, there's a book called, I think it's The Cable Cowboys, that talks about the advent of cable here in the States, cable TV. And it's, on one hand, it's like this really arduous explanation and journey through like, the deals that happen behind the scenes. And it's like super detailed. But there's one central lesson there. And like sometime in the 70s, I want to say mid to late 70s, cable was largely deregulated. There were certain regulations that really prevented growth in the industry and more market driven activity. When that was removed, things went wild. The same thing happened with airline deregulation. So right now, crypto is in its regulated stage, and assuming that those things gradually get addressed, whether through the help of the courts or Congress, I think things will change, and then you'll have innovation coming back. The terrifying prospect is that doesn't happen, and we have a CBDC, a digital currency central bank, things like that. So yeah, we're definitely at this sort of fork in the road, and I hope collectively we as a country make the right decision.
Yeah, it's funny, I don't think a lot of people know the power of on-chain analytics and transparency. So, I think because of Silk Road, Bitcoin developed this completely wrong reputation of being a really good way to like operate illegally in secrecy, right? And if you're a hacker in crypto, I feel like it's getting almost impossible to actually get your tokens or your wealth that you've stolen or gotten from nefarious activities off chain. In fact, I heard that I read somewhere that Hamas asked people to stop sending cryptocurrencies to support them because all those assets are getting frozen. And from an investment perspective, people don't realize, and it's amazing you wrote about this in your 2014 paper, but you can immediately tell how an on-chain protocol or startup is doing, right? You can see how much money they have in their treasury. You can see how many users are joining the platform or leaving the platform. You can look at all sorts of analytics that generally you would have to ask for. And on the flip side, you can see where money's moved. And so to your point, this is a really powerful tool. And I think the best way to fight fraud in crypto is to having more easy ways to see if this is a legitimate transaction or from a legitimate party. And simultaneously, it's a horrible tool. I mean, it's a dictator's dream, right? If you want to be able to say, Ken, I don't like you, so I don't like your political views. I don't like what you've done in the world. So I'm going to make it so you can't spend your money at grocery stores. And they can just do that with a push of a button with a centralized currency. And most people don't realize one of your most basic, intimate freedoms is your money, right? And that's kind of like we think of these totalitarian governments where people just basically, they just basically go in and like in Russia, right? And they freeze your accounts if you show that you're not in support of Putin, right? Or they do this in China. They would love to have a central currency. Like that would be a dream, central digital currency. That would be a dream come true for them. And I don't think a lot of people, they're very ignorant of both sides of the coin, right? They think crypto is only for nefarious activities. Elizabeth Warren has boosted this, but of course the data shows that it's 1% less of transactions. In fact, you're far better off to use cash if you want to do some sort of criminal activity than cryptocurrencies, especially now. And they really don't understand, what a centralized digital currency, what it would enable some party to do if they just disliked, what you'd been doing. They can completely cut you off from essentially existing in the modern world.
Absolutely. Yeah, it's scary stuff. Kind of to your point about the real time aspect of crypto. This is one thing I really leaned into in my most recent role. In October, I stepped down from a role I had had for about 2 years as tokenomics workstream leader at Shapeshift DAO. This was like the decentralized version of Shapeshift, what had been a centralized crypto exchange. But the number one thing I really wanted to leverage there is really leaning into that transparency aspect of the blockchain. So, anybody looking at the project, looking at Shapeshift DAO, I wanted to make sure that they had a very updated and clear sense of the status of the DAO from a online asset standpoint. So, okay, this is the DAO's treasury. This is what it's spending money on, things like that. This is how much runway it has. Nothing should be swept under the carpet. I love the idea of like maximal transparency, and it's such a perspective change. Like the typical way of doing things is everything is very, you keep information hidden. You don't want to give away like strategic advantages and stuff. And but really, like building out in the open, the open source paradigm is great, and it applies to finances as well. So that even though I didn't have the ability in a decentralized context to really unilaterally do or say anything, make anything happen, I really encourage the community to lean into that transparency and be like, okay, guys, anybody at any moment should be able to see like how much runway the DAO has, how much stable coins or ETH that the DAO controls. And even though Shapeshift is a relatively smaller project right now, I'm optimistic. I think in the future it will be larger. But regardless, I think a lot of other projects can learn from what we were building. Like to the extent that startups and even successful businesses in crypto and eventually built on crypto can embrace that. That'll give better insights to potential business partners, to investors. And that's kind of speaking to kind of turn it into back to the investing theme is like that's like a good sort of metric, I think, or a good thing to keep an eye out for is like if you're assessing like a project, do they do a good job with transparency? Do they have a very clear is there a clear way to see like, okay, their assets on chain, or are there any risks that they aren't revealing, that sort of thing. When people are trying to obfuscate numbers, it's usually a red flag. So transparency all the way.
Yeah, it's rarely a positive story where somebody says, we've got the information, but we don't want to share it with you, but you should trust us. I mean, even when you're doing diligence on startups, and FTX was maybe the most hilarious failure of this because of how far they were along and how much capital they raised. But you sort of like, you ask for the financials of the startup, you look at the financial model, they tell you how many customers they have, they tell you what their success metrics are. Most of the time you have to trust to some degree in some of those areas. You have to trust the entrepreneur and the team. And occasionally you'll see in the news, I mean, I think there was a woman, a startup founder recently, that sold a fintech company to, I think it was JP Morgan or one of the big banks. And they came back and said, you said you had all these accounts and you have a fraction of accounts, right? They're all fake. And that wasn't a Web3 company. That was a Web2 company. But of course, if it was a Web3 company and it was on chain, that never would have happened, because they would have instantly been able to see how many active users there are, and the data, they could have pulled it up in seconds. And people are always amazed in the investing world when they ask me, they're like, how are you able to diligence any of these crypto companies? And their perception is they're really secretive and there's nothing going on there. And then in seconds, I can go to Dune or some sort of analytics site and I can just show them the data and their jaw just drops to the floor, because it's the complete opposite of what they thought. I was like, I can tell you exactly how this protocol is doing. I can say, I can tell you how many returning users there are. I can tell you how many new users there are. I can tell you how big the treasury is. I can tell you what they're paying each person from the treasury. I can tell you what they're paying service providers, right? We can look for all these red flags. Like, did somebody pay a consultant $1 million to do nothing? Or, all these different things that often actually don't come out in Web 2 till much later because it's really hard to get that access to that information. So I think is an incredible lesson is if you're curious about crypto or if you're negative about crypto, I think the contrarian mindset in general is curiosity, right? So it's like most people that aren't contrarians, they just do what the crowd says they should do. And they take for granted the crowd knows what they're doing. And I think contrarians have observed that the crowd rarely knows what they're doing and they rarely have a reason for what they're doing. And so it's always better to ask questions. And I believe that's really what being a contrarian is being willing to challenge or investigate something that everybody is assuming to be true. And I say everybody, like that's the popular opinion. And
Absolutely.
I think that's it. It's not just challenging what is for the sake of it. It's being more of like a scientist and saying, people say there's always what we've assumed, or there's always the way we've done it, and saying, okay, well, let's investigate if we miss something, or if the general consensus missed something. And that's sort of, I think, what drives most contrarians and how they got to their success story in general.
And this certainly, I think, helps with timing entries and exits as well. There's that saying that, or sort of kind of general guideline of, if your Uber driver and your dentist are talking about crypto, it might be time to sell a little bit. But it's so important to keep that sort of thing in mind, because in crypto, things can get very ideologically heated, and you want to diamond hands everything. Oh, this is going to change the world. But at the end of the day, I mean, and we saw this with the last cycle, and we'll see it with the next one, is, things get toppy, and, you feel like a genius. We all feel like geniuses in the space for having, some exposure to it. But that's right when you should probably take some off the table. I'm a big buy and hold guy for sure, but there's something to be said for selling the top, at least a portion, because then you have some powder dry. Like, for example, I was able to participate in some angel and seed rounds in this bear market because I did sell some at the top, and that's important, because otherwise you're just going to kind of be holding through things. It's psychologically much harder. So you really have to sort of, I'd say in that case, your biggest enemy might be yourself, because you start to believe the hype. I'm such a genius. I don't want to go too far down this tangent, but I just read a book about the collapse of long-term capital management, the hedge fund in the late 90s that blew up, which is a fascinating story. But, these guys, they literally had a couple Nobel Prize winners on their team. Geniuses, and initially the freaking thing worked. Like, the fund was doing amazing, unprecedented returns, and they thought they had a way to manage risk, but they started believing their own hype, and they started losing sight of the fundamental principles of risk management that should guide any investment. And lo and behold, they blew up. And this has happened many times in crypto as well. So that's another thing I just wanted to emphasize for your audience. If you're just getting into potentially investing in this space, is even though it's a new asset class, the fundamental principles of risk management apply just as are just as relevant. And maybe even more so, because it's so volatile. So diversify your holdings. Always remember to sell into a bull market to some extent. Don't get caught up in hype. Don't believe your own hype. Stay humble and stay focused.
Yeah, that's great. And we're running out of time, so I'll close with this thought, which I think is a summary of what you're saying. It just came to me, but I think at the heart of what we're saying, and I'm sure you're the same. I love bear markets for this reason. I don't love the price depreciation, but the truth is when everybody's excited about something and they don't know why, that's when you should be really cautious. And when everybody is really down on something or negative on something and they don't really know why, and I mean, they can't really articulate their thesis of why they're bearish on it, that there's probably an opportunity there.
For sure.
Thanks for joining us, Kent. I really appreciate it, man. We'll talk soon.
Total pleasure, Mike. Thank you very much.